So welcome to our Alberta on Fire December 2014 update. Today what we're going to be talking about is oil, something that is on everyone's minds, oil, the sliding, and what it's going to do to Alberta real estate. So we have Warren and Corey here from the Alberta on Fire investor team, both of them realtors. Corey, what do you think? What's going to happen to Alberta?
So first off, I'll say we're not economists by any means, but I'm going to quote one. Here's the chief economist of ATB Financial. This is what he says regarding the oil going down. His article is entitled "The Upside to Oil's Downslide in Alberta." One thing he mentioned is faster is not always better, and Alberta's economy is strong enough to easily sustain a bit of slowdown. So that's good news.
So anyone that lived through the 07 boom as investors, none of us really want to see that again. So a little bit of a breather is actually a really good thing for investors.
RBC Economics, they have an article entitled "Alberta's Economy to Continue to Grow in 2015 Despite Drop in Oil Prices." They mentioned that the forecast for our GDP is dropping to 2.7 from 3.5. So yes, it's a drop, but it's still going to lead the country. They also mentioned that the negative spillover effects have so far not materialized, as boom-like conditions continue to prevail across the province in 2014 as a large number of people are moving here. So that's good to hear.
And that's an article that just came out in the last few days.
December 11th, we got another article from the president of the Realtors Association of Edmonton. So how is this affecting our real estate here in Edmonton? He said that we've got away from being solely dependent on oil in the Edmonton market, with $5.5 billion in infrastructure construction projects going along in the downtown core alone. So that's a lot of work going on downtown. He said that'll be sustained for the next 3 to 5 years. Regarding growth, he said right now we're taking everything. We're like a sponge. Everything being built is being sold. And we deal with a number of builders. That's what we're seeing. There's not a lot of inventory. Would you agree with that, Warren?
Yeah, so based on what Corey said, there's still people moving here for work. So in terms of having renters in place, that doesn't seem to be an issue. We have very low vacancy rates. It's actually would be nice to see a breather and have less competition on the buying side of the market. So this could actually materialize into being a benefit to those of you who are looking to grow your portfolio in 2015.
So what do you think about how we can, because there is going to be a change, it isn't going to be as hot as we thought. It's still going to outpace the rest of Canada, but it's not going to be as hot as we thought. So what do you think we can do as investors to kind of cushion that a little bit?
So similar to 2008 and 2009 rental market, I don't think we expect it to pull back to that point or that rate, but just having good property management will definitely help weed you out from the other landlords, and buying the right property, something with maybe a little more square footage. Look at getting that extra double garage, detached garage for more rent. Being pet friendly, those kind of things, buying in the right areas close to new transportation and new development.
Another thing we always look at is supply and demand too. And you know, when we went through our last downturn, there was over 11,000 units on the market. I just did a search today on our MLS, and single family homes, we only have 1,800 in the entire Edmonton area. So we have a very low supply. We still have a very hot demand with people coming to the province. So it's not affecting the real estate market at this point.
So couple things to just keep in mind is that the headlines are out there just to catch our attention. And the worse the headlines, the more attention we give. So Alberta's economy, we expect it to slow down. That's not a bad thing for us investors. We're actually looking forward to that. But you know what, if we look behind the headlines, in this email, you're going to see a chart that's attached. Talks about rigs drilling and how it's actually up 14% year over year, and that's October 2014 year over year. So there's a few other articles in there too, talking about the different growth, and we stick to our old adage of what Warren Buffett said: to be greedy when others are scared, and scared when others are greedy, or something like that. So
there's a lot of fear in the market right now, as Tiff was saying, and so that actually creates a really good time to be making some investment purchases.
But it is up to your own comfort level, so for those who aren't comfortable with it, don't take the risk, and for those that are looking for an opportunity, this is a pretty good one, in our opinion. So that's it. That's our update. Any questions, comments, feel free to get back to us, send us an email, and we can address anything that you have. Thanks very much.
Thank you.
Thanks.